Hey, what's up guys, it's Jonathan here, back with another public stock portfolio update. So as usual with these updates, I usually start off with doing a recap of what happened in the market this week, doing a recap on the moves that I made in the public account. In this video, we're also going to discuss the AMC GME challenge and the purchase that I made. Then we're going to talk about a couple things that you need to watch out for in the near future that may affect the market. So if any of this brings you value, please consider hitting the like and subscribe button, and let's just get right into it. So to recap what happened in the market this week, the week started off pretty rough with a strong decline in the S&P 500 to start off the day on Monday, only for the market to rally back early Tuesday. Once the market had rallied back on Tuesday, back to the price that opened on Monday, it stayed flat for the rest of Tuesday, then it declined again on Wednesday, only for it to rally back Wednesday afternoon. Then all of Thursday was pretty flat, and this rally continued into Thursday, and from Thursday afternoon all the way until Friday at close, the market was pretty much flat. Net, the S&P was up about 1% for the week. So now moving on to a public account recap. As always, if you guys want to see the moves I make on this account, check out the link down below for public. If you sign up using that link, you get a free stock up to $70. So for the entirety of the week, I did want to buy the dip, but after I saw the dip that happened on Monday, I was waiting for a bigger dip before I buy. Unfortunately, it seemed like Monday was the best time to buy. But even though I missed that dip, I still felt like I got some pretty good deals in the market. So I didn't sell anything this week, and honestly, you probably won't see me selling much in this portfolio. I don't necessarily see the point of buying and selling shares unless if a share has run to some ridiculous amount. So as always, what I do every week, I deposit $10 into this account and I buy something every single week. So this week I actually made two buys. The first buy was into Enphase Energy. I bought about $4 worth of it at $155 a share. Like I said in the last portfolio update, I'm probably going to dollar cost average into this position until it hits about $200 a share. And like I've said many times before, I'm really bullish on Enphase. I think that once the chip shortage disappears, this company has a lot of room to run. The second buy I made was into Lemonade. And with Lemonade, I bought a little bit more than I did with Enphase. I bought about $6 worth of it at $63 a share. And at this price, I think that this is a really good entry point into this company. I really like their business model of providing insurance to millennials, as they're one of the few companies that do what they do and have such an automated system that's very user-friendly. Also, I like the concept of their reinsurance program, where they're actually not taking the risk of every policy that they write. They're actually selling those policies out to different insurers. I think it's a really smart move on their end. So right now, the entire portfolio is at $50.11. The cost basis for a portfolio is at $50. So it's basically flat. Like I said, this little bump here is just the $10 deposit I made. With the purchase I made on Friday, the average price we're sitting at right now is about $155 a share, and we have about $17 in Enphase. So the next position that we have in this portfolio is Tesla, and it sits at $10.67, and our cost basis on it is $736.38. It makes up about almost 22% of the portfolio, while Enphase makes up about 34% of the portfolio. The next position that we have in this portfolio is Lemonade, and it currently sits at $9.83. Our average cost basis on it is about $65. Next position that we have in this portfolio is Google, and it's at $7.88. And our average cost basis is about $2,800 a share. It makes up almost 16% of the portfolio. I'm sorry, I skipped Lemonade. Lemonade makes up about 20% of the portfolio. The next position that we have is Amazon, and our Amazon position is at $4.79. And our cost basis for this position is at about $3,500 a share, and it makes up a little under 10% of the portfolio. So now moving on to AMC and GME challenge. I'm not sure if I mentioned this in the last video, but I decided to buy AMC. And because I didn't buy it on time, I decided to buy a little bit more than the $120 that I promised to buy. So I bought 4 shares of AMC at $37 a share. And I plan on holding this position until at least the end of the year. I didn't make that purchase in public, mostly because I didn't want to confuse this portfolio with that challenge. When it comes to any of these investments that I talk about, it's very important that you do your own due diligence and you only invest how much you're comfortable with investing. So make sure that you guys are always doing your homework and that you don't just invest in something because I'm investing in it. So moving on to important things to watch out for. Usually I like to limit this to only next week. I think that there's a lot of major catalysts that are going to come up for the rest of the year that are all kind of relevant right now. So important things to watch out for in the near future when it comes to the market. Last week we discussed the debt ceiling. You may have heard that the Republicans came to agreement to temporarily raise the debt limit to fund the continuing resolution until the first week of December. And you're probably wondering why the Republicans would do that and not put the pressure on Democrats to figure it out. And the reason why they didn't do that is because if they had let the debt ceiling hit and the country defaulted on its obligations, that could really destroy the Republicans' chance winning the Senate and possibly even the House when it comes to midterm elections next year. So the debt ceiling right now, for the most part, is pretty much resolved. It may come up again when it's time to determine a more long-term path forward when it comes to the debt ceiling. So I would say watch out for that, but that probably won't become an issue until December time. Last week, we also did discuss the infrastructure bill. And now since the debt ceiling is resolved, this is a much longer term catalyst. When it comes to the human infrastructure bill, it's still being negotiated. So we're not really sure how that's going to affect the markets. So like I said, the infrastructure bill is more of a long-term thing to watch out for. It can become a really big issue in December if we don't figure out what we're going to do about the debt ceiling. So I would say watch out for any news you hear about that. So when it comes to Evergreen Crisis, again, this is something I did talk about last week, and I did say that I was scared that it may cause other problems in the economy. I never got a chance to make the video that I wanted to make about Evergrande, but essentially the fear was that if Evergrande was to default, it would cause the people who lent Evergrande money, banks and other institutions, they could have ended up in a situation where they wouldn't have money to lend out to other businesses, which could have caused the entire Chinese economy to come to a grinding halt, which would have stopped manufacturing and only caused these inflationary fears and these supply shortages problems to become even worse. But news came out, I believe, earlier this week stating that Evergrande did get acquired by a different developer. So for the most part, this crisis has been averted. So it's not really something that we should worry about anymore. Another thing that we have to look out for is the jobs report. So the jobs report came out earlier this week and it gave some really funky numbers. So we were expecting about 500,000 jobs to be added to the economy, but only about 200,000 jobs were added. But at the same time, the unemployment rate fell to 4.8%. So it's a little confusing that the unemployment rate fell, but we didn't get as many jobs as we were expecting. So it's going to be really difficult for the Fed to use this as an indicator if they should start tapering or not. So it does leave some uncertainty out on the table about what the Fed's next move is going to be. But hopefully the next catalyst I'm going to talk about will be a little bit more clear. And that's the inflation report that we're supposed to get on October 13th. And next update I'll discuss the inflation report. So we'll see what the inflation report says, and then we could determine how we're going to move forward from there. The next catalyst on the list that I have is the FOMC meeting in the first week of November. This is when most people are expecting the Fed to come out and say that they're going to start tapering their bond purchases. Look out for any news you get about the FOMC meeting that's going to happen in November. So that's pretty much it. That's my rundown of the market this week and the public stock portfolio. If you're interested in seeing the moves that I make real time, check out the link down below for public, where if you sign up using that link, you get free stock up to $70. Like always, thank you guys for watching. Please like, share, and subscribe. Check me out on all my social medias. Leave me a comment down below about how you feel about this market, and I'll see you in the next video. Bye.